Well, hello traders and investors. I'm LA and this is your daily NeoTA wrap. We take a look at these markets from a neoclassical perspective, asking ourselves what happened today and what does it tell us about the coming ones. And we do that through supply and demand on the charts. We do that through a set of tools that work no matter which way the market goes, unlike classical. And a lot of times people ask me, what's the difference? The main thing you can consider is classical TA. You got a bunch of tools, lots of tools. There's probably 200 or 300 tools that you can use. And of those, some work in up markets, some work in down markets, some work in sideways markets, some work in, various types of choppy markets. But the tools you choose, you have to know which way the market's going or to use those tools effectively, because they don't work worth a flip, usually, in a market that they're not designed for. Neoclassical works in any market, any type of market. It doesn't really care because it's looking at supply and demand. It's measuring whether or not the buyers want to step up or not, or whether the sellers want to or not. And that's tape reading, folks. That's the way it used to be. That's the way it should be. And that's what works. I do this show 4 times a week, Monday through Thursday, broadcast out of 10 o'clock Eastern Time. Archived on YouTube. It's under the channel L.A. Little. If you want to subscribe to the show, you reach up in the right-hand corner, hit the subscribe button. If you want to talk about joining the community here and getting to the tools, the comments that I make, the daily, weekly updates I do, you can write me and we can talk. As far as what these markets did today, let's take a look at them. If we look at the numbers here, we had pretty much a down day most of the day. Closed reasonably flat, down 0.14, 0.29 on the NDX and the S&P respectively. The Russell actually was up just 0.05, NASDAQ 0.12. Gold was up, turned down, flipped around, came back up as the market sold down. Silver couldn't get the gains. Bonds, they take off again. I showed you, I think it was on the weekend show, the multiple swing point breakout. You should expect an extension. That's what you're getting on the bonds. If we move to what's happening in the market, let's start with the S&P 500. Now today you really had an inside day, so you really didn't get much information here comparatively, right? So you've had 3 days now, kind of a little rising wedge if you're looking at it from a technical perspective, classical TA. Had a little more volume today. But inside. So it doesn't, in neoclassical, you get an inside day, it doesn't really tell you a lot. Why is that? Because you're measuring supply and demand, and usually inside days really don't go up against anything important. On the NASDAQ, a little bit more volume, reaches a new high, says it will probably try again tomorrow. NDX, also a little bit more volume, reaches a new high, probably will try again tomorrow. Russell, more volume, reaches a new high and actually closes at 1 compared to yesterday. Again, we'll try and push higher tomorrow. So the indexes themselves look as if they want to try and push higher tomorrow. I think the wild card is not in the U.S. markets. It's going to be in Europe. Europe got a little surprise off of the May calling the snap elections over in London. And you had probably the worst day in London you've seen in a long time, down 2.5%. Volume expands, breaks a bunch of swing point lows here on the daily. And if this continues this week, you're going to break them potentially on the weekly as well. You got under the big bar with all the volume on the weekly. And so at this point, I don't see what stops this. And of course, that bled over into the other European markets. The German DAX comes off. And again, this is still, not terrible in terms of the way it's set up. The problem is it's terrible in the terms of what damage it's doing. You have a swing point high, bullish retest regen, gets up underneath it. You have another one down here, gets up underneath that one too. As a matter of fact, I drew it a little bit too far down. It's actually up about right there. So you break 2 of them and you give up those areas. That says anytime you see a bullish retest regen, give it up. It says that what was this way is probably that way on whatever time frame it is you're looking at. On the weekly, it doesn't look that bad. I mean, it's still doing okay. If you look at the CACs, the French market, Same thing, breaks down, right? Now it doesn't have a swing point high. It was unable to print one here, but it is weaker and volume expanding. And if we look at the Swiss market, which has been holding up the best of all, that one gives it up today, is pushing down towards the swing point low. So you're seeing red in Europe. You've got the elections coming up in France. You had this surprise out of England today. And what we're going to be focused on is what these guys do overnight. Now, I don't think it's out of the question to expect some sort of a bounce tonight, but if you don't get that and you actually see a continued sell-off without a bounce, I suspect that's going to bleed over into our markets. And so I hesitate to say that we're going to bounce tomorrow and keep going as a result of that. If we look inside our market, look at the major sectors, there are a couple things that really stand out. Durables pop up and testing the highs. Now, they got over the high today. This top was 55.50. This other one was 55.48. They traded above that. They closed at 48, but they're pushing it with a little bit less volume. So far, that's a test failure. We'll see if that money keeps flowing into quote-unquote the safety. What this tells me and what it should tell you is that the money doesn't want to leave this market. You know, you had this big run up off of the February lows, sideways. Now they're up here testing the tops again, and they're doing it because nobody wants to put their money into more risky things. And so, we're going to go to the durables because they're safe. Same thing with the utilities. Money's flowing into the utilities because they're safe. And usually healthcare gets a safety bid as well, but that wasn't the case today. You had some earnings coming out, Johnson & Johnson, some others getting hit. That was pushing lower on the healthcare. Financials, you probably had one of the worst earnings debacles today in, Goldman Sachs, down, I don't know how much they were down at the end. It was about 4.5% at one point. Of course, they're not a huge weighting inside this. Matter of fact, the large weighting inside this is Wells Fargo. I was tweeting today that Wells Fargo is not a bad setup here if you're interested in it. If we look elsewhere, if we look at, say, the industrials, for example, industrials were pushing up early today. They did get higher, but they weren't able to keep it and close lower. And so that's like a little over-under. If we look at the technology sector, they were pushing early as well. Lower volume, same scenario, over, back, under. If we look at the XLY, Amazon was leading this one up early. This thing did end up slightly higher, so it wasn't an over-under compared to the prior bar. Moving over to transports, the transports pushed up over, under, and if we look at the semiconductors did push up and hold. So you got a mixed bag from the sectors, mixed bag. Certainly a negative bag, I should say, over in Europe. If they get their bounce, this market can bounce in the morning. But folks, I think we're kind of stuck here. I don't see how we go that much higher. And if I had to do anything, I would probably just sit and bide my time, make short-term trades, and trade off what they give you without committing a lot to a longer-term idea just yet. That's it for tonight. Have yourself a great one. Take care, and I'll see you next time. Good night.